Time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take you through the charts, and here to take you through the trades and the names is Tim Bohen, the chief technical trader at StocksToTrade.com. Great to see you both. Tim, let's start with a big picture thought on the market if we can. Obviously, things changing as we speak, flipping green to red here to close out the week. What do you make of it?
Yeah, well, evidently Trump knew I was coming on and decided to flip the whole script on me. Listen, still, going back to April, I was on Schwab TV talking about, tariffs and stuff. I know that a lot of this panics people a lot. We see this reaction all the time. But I mean, over and over, and even your previous guest mentioned it. I mean, all of these big pullbacks end up being dip buy opportunities. Now, you have to respect the market today. I mean, obviously yanking 5 minutes before I came on. But if you look back over and over again, going all the way back to April, every one of these have just presented opportunities to either add to your positions, or take new positions on some of these high flyers that you could never get an edge in. So I don't know. I just perceive it. I'm still very pro-tariff. Haven't changed my position going back to the election. I think it's good for the economy, good for the country, and look at these situations as opportunities to buy stocks cheaper at the end of the day.
Tim, speaking of opportunities, tell us about the first name that you're looking at. A name of goes by Terawulf. For those who may be unfamiliar with this one, talk to us about what you're looking at here.
Yeah, so the one nice thing I tell you, even with the tariff news, I mean, I think of the AI and data centers and energy. I mean, nothing's going to stop this train. I mean, no matter what happens, this is the new obviously I call it the biggest technology ever, bigger than the wheel, fire, the internal combustion engine, and electricity. So it's never, in my opinion, for the short term, we're not going back. And Wolf was one. Rick might remember. I was on back on September 12th, and loved this stock then. Love it just as much now. It's up 30-40% from where I recommended it. But I just don't see. Obviously there's going to be red days. There's going to be pullbacks. But I just don't see Wolf slowing down anytime soon.
Yeah, we'll slot AI, and then we'll slot the wheel and fire in there somewhere as well, Tim. But hang on. We'll get to your next one in a second. Rick, you're going to walk us through some of the technicals on this one. Stock ticker is WULF for those who maybe haven't seen it. And from talking to you all these years, I know we're looking at standard deviation channels, and I don't even know how many that is, but I can tell it's a lot.
Yeah, for the record, I also think the wheel is good. But when we have our jump to the upside here, we see that we had this gap here. So we had a fundamental change in what was going on with the stock. That's usually what these large gap up price movements represent in some ways here. But you're right. The standard deviation channels in this case, we had to start with our linear regression line here, our line of best fit based on closing prices, then 1, 2, 3, and 4. And remember, too, this is a short-term 20-day, 1-hour chart. You can use these on any time frame. What it's showing you is the price move relative to its own history. So this is a fairly extreme short-term move. That's kind of the theme with all these 3 stocks today. So I wanted to start with a short-term look at each one here. But, anyway, to specifically look here, the 3 and 2 channels are kind of these short-term boundaries right now, right around 14 and 1480 or so. We've broken out to the upside from our channel. We have, however, crossed back below that overbought area, that threshold of 70 in the shorter term here. But remember, though, the shorter term price movements are typically less significant than the longer term ones. When we look at the longer term trajectory here, the move up is even more stark compared to the rest of our history. We had this gradual grind to the upside in our rising wedge type shape here, typically more of a bearish pattern. But as I often say, what you're really looking for is the breakout beyond either lines. It can go either way. In this case, we pushed to the upside. So now we have our gap level, kind of these same price areas to watch here. In this case, the highs that we saw before this gap up, 1374. You could also say potential support near 1250 based on our +2 standard deviation channel and our old highs. RSI, though, on the daily level here looks quite strong still, making new relative highs and pushing upward with price here. So an interesting situation here, potential resistance here at 1488 based on our +3 standard deviation channel.
Yeah, quite the move. Can see why it's got your attention here, Tim. But let's talk Applied Digital. I got one eye on the market. We'll update if there's anything here. I'm sure Tim does as well. We are on the lows of the session, so we'll get to that if we need to. But for now, talk to us about Applied Digital.
So this is, it's kind of interesting. This is another kind of name that I've been bullish for quite some time. I was actually on with Jane King at the New York Stock Exchange, and she reached out to me looking for, this is back in the summer. Obviously, AI was the biggest thing, and she kind of was like, hey, what's a kind of an unheard idea? And I came to her with APLD. What I really like is the cooling aspects of things. So I actually started an internet company way back in the dial-up days, back in the 90s. That was my first career. And, we were growing huge. It was the 90s, internet, all of that. One of the biggest, roadblocks we constantly ran into was cooling, to keep the technology cool because we were growing so fast. APLD really, they do a lot data center, but they really focus in that cooling aspects of things. And again, another stock been on a heck of a tear since this summer. Great earnings. I think it was either yesterday or last night. So just another kind of similar to WULF, but just love that cooling aspect because that's going to be, not only is it energy, they got to get enough energy, but keeping that stuff cool in order to be able to add more capacity, as they grow. So.
And Tim, it's making a monstrous move here today. It's up almost 20%. So certainly one that I can see why not only it's on your radar today, but maybe has been, as this has been bubbling under the surface clearly. But hang on, we know we got one more. I want to bring Rick back in, walk us through sort of the short-term look once again, then we'll get a big picture assessment, APLD.
Yeah, anyone who's been around a lot of electronics can tell you it gets quite hot. Electronics work better when it's cool, so it's an interesting thought here that maybe kind of more of a picks and shovels type play in this case. But what we can see now, a very similar short-term chart, a 20-day, 1-hour chart. Maybe the price movement doesn't look exactly the same, but it's the same type of gap-up activity and then followed by a brief pullback here. In this case, we are taking out our previous lows that we established here, but that's not really, necessarily cause for alarm here. That would be, part of this phase of consolidative behavior. What you would hope if you were bullish is that then after the pullback, after the profit taking, after the readjustment, the trend would continue up past those initial highs near 39.07. So we could see maybe perhaps a pullback to this old channel level here that comes in right around 33, or maybe even the gap could get filled near 30.29.98 or so specifically. Those would be some possible levels to consider for this one here. But when we look at our longer term chart, in this case, we are at 1, 2, 3, 4 standard deviations to the upside here. So we topped out, or not topped out, excuse me. We opened right around that level. 36.92 is where that one came in here. So that would be an upside level to keep an eye on here on the way back to that 39 level.
Yeah, these stocks have something in common, I'm noticing, Tim. Not only are they maybe accelerating in terms of the movement today, but they've been on nice runs in that almost parabolic shape to it. So the last one, I'll be honest, this is the first I've seen this stock ticker. So give us a rundown of why, 4U's, Energy Fuels is on your mind.
This stock always cracks me up because we talk about it a lot, in the community that I run, and every time I say it, I always end up, I think I say like 5 or 6 U's because it's like you. I never know when to stop. But anyway, when it comes to the trade thesis, another kind of repeat name that I've loved for a while, but going back to AI data center, I'm a major nuclear energy bull. Love Oklo, actually recommended Oklo about a month ago on the big 3, and she's been doing well. So love this as another data center play. I think the really only real long-term solution to the power issue that we have in the country and the world is nuclear. It drives me nuts that it went away for decades. It sounds like, it's coming back. And, this stock's just been on an amazing tear. And one thing I do like, looking at the intraday chart, when that tariff tweet first stopped, this thing ripped, kind of went back to where it is. Everything's selling off right now. But there was an immediate positive reaction. It went straight vert as soon as Trump posted that tweet. So I consider that, I like to see when these stocks don't sell off when everything else sells off.
Tim, I got a real quick question for you, because I think the nuclear discussion has been one, especially for those who kind of look under the surface when it comes to markets. They look for opportunities maybe before the rest of the masses see them. We're talking about this back in 2021, 2022 is something that we're going to need. AI just kind of further accelerated that process. So whether it was investment in uranium-based things, whether it was these nuclear, utility companies or others in general, what do you personally look for? Are you involved in trying to get in there earlier? Do you need something on a technical front or a chart to say, hey, we've arrived?
Well, that's why I love what Rick does. Is I've been on with Rick I think 5 or 6 times. I don't know if I've ever disagreed with him. What we do, what I do, what I trade, what I work with people at Stocks to Trade, is we always like to have that story attached with a chart. So it's like, it's not any nuclear stock. We're looking for the type of chart patterns and the technicals to kind of confirm that move, because it's one thing to have an idea, but there's tons of nuclear stocks out there. When you take that idea and couple it with a price chart, that's the types of trades that I make, and that's the kind of trades that we look for every day, because it's kind of aligning the technicals and that fundamental idea.
Well said. And speaking of those technicals, Mr. Ducat's still with us. He's going to walk us through the technicals on, as Tim said, you just keep saying you.
Exactly, yeah. So this one is perhaps the most different in the shorter term here, but still exhibiting a strong push to the upside here. In this case, we had a more consistent ceiling near 1860 or so. That was about where we bottomed out after the gap up as well. Then we had more of this type of behavior that I'm talking about. We had this bull pennant type of pattern here where we had triangular price movement, then another push up. In this case, the the area of those old highs is where we bottomed out after the move upward here. So now what you'd be hoping for is, perhaps more of the same activity, the trend continuing here. But for now, hitting those highs, 2233 is the mark to watch. RSI also continuing to improve as well, moving further into that overbought area, making new relative highs as well. We have our shorter term volume area lining up with the $20 level, our green line here matching up with some other highs. If we were to give ourselves a little more duration here. Now, Tim, you're really making me work today with all these colors. I had to add all these extra colors, but I do get to display my beautiful purple pastel set here. But in this case here, +4 and +5 are the ones to watch here, right around 2126 and 2475 for those standard deviation channels. So really getting quite stretched and extreme. That doesn't mean it can't continue, though. It's just saying, like, relative to its own history, we're way up in a short time here. So those would be some possible points to consider as guidelines for where you might look for price to perhaps start to take some footing or stall out if it does keep moving higher.
Good stuff, guys. I appreciate it as always. Mr. Tim Bohen with the thoughts and a couple stocks that were on his mind. Thanks to Rick Ducat as well. But guys, as we were talking, new lows in the equity market. Rick, I want to take a look at a heat map if we could just real quick. We obviously got the quotes on the screen. I think we're about 15 points off the intraday lows, but we have swung down, way back. For those who caught my early commentary back on opening bell, I said a distant support level, a 1-month EMA was sort of down in the 6,660 zone. Well, we're down there now. We are back to that 1-month moving average, so something to watch here intraday. You see the heat map on the screen. Not only is they're about 75% of that screen is red, Rick, they're starting to become some pretty bright colors.
Yes, and it's looking like the more defensive names are the only safe havens today. Consumer staples and healthcare, those are the areas that are seeing some modest gains. Financials a little bit too here, but a bit of a turnaround, yeah.
Yeah, no doubt about it. We'll obviously continue to monitor as this red becomes more and more red.